All righty, what's up, guys? Mal Sanchez with Portafolio Capital Management, checking in from San Antonio. This is the first time we actually make a video, not live, but we will publish this for sure. So today I want to kind of cover some information. As many of you know, there are economic data releases that happen on a weekly, monthly, quarterly basis that affect kind of how we position not only the portfolio, but really the investment management perception that we kind of build in tune with the market. So with that being said, this morning's report from the Bureau of Labor Statistics, specifically the jobs report for the U.S., this morning it came up significantly increased from the expectation. I think the Dow Jones group had published that expected number should have been somewhere along the range of 180, 190K. This morning's report produced 272,000 jobs in the month of May for the United States. Now, what that means, let's interpret what that means for one, the economy, for two, monetary policy. One, the economy, it's great, right? This information that comes out, it shows that the employment in the United States is growing, it's robust, even though unemployment rate did slightly increase, I think from a 3.7 to a 4% today for the month of May. But nonetheless, that number, the 272,000 number, beating the expectation of that shows a very robust labor market in the United States. Now, we could dive into the further details of the participation rate. I think it was falling and such, but we're not going to get into that because we'd be here for about an hour. Nonetheless, let's interpret it from face value. From an economic perspective, it's a good sign, right? The United States is doing great. There's a strong labor market. Now let's look at it from the monetary policy side. So we all know that the Fed has a dual mandate, and I speak about this a lot simply because that's the conversation that has been for the past, let's say, 3 years. Dual mandate of the Fed is one, price stability, which is the inflation question. Two, it's the maximum employment question. So those two things, let's give into the idea of the maximum employment question. Employment hasn't been an issue for the past, I would say, 15 years. We've seen jumps during the COVID crisis or the COVID pandemic. We did see jumps, but that was kind of inevitable because everyone is kind of shutting down at that moment. I think the Fed understood that, hey, this is a temporary kind of squeeze in the labor market in terms of employment and maximizing employment. So there really wasn't any policy shift, but the inflation question did remain. We did see that right before the pandemic, the Fed was already in the trajectory of moving interest rates up, and the pandemic hit. And at that point, the Fed made a decision: hey, we're going to cut back. We are going to keep what's called a dovish approach to the interest rate policy that they were putting in play. And then from there, a couple of years later to where we're at today, they're back on the trajectory of raising interest rates. Now, I don't think they've touched interest rates, I think, for the past two meetings. I could be wrong. However, with this employment number coming out and then moving into next week's meeting, that creates a kind of a pivotal moment of is the Fed going to reduce interest rates? Chairman Powell has been pretty firm in his stance in terms of waiting for the data to come out, making sure that the economy isn't going into that kind of that hard landing that, we're really expecting the soft landing before he even thinks about reducing interest rates. Now, this kind of complicates it, in my opinion, because one, yes, he does want to see that the inflationary pressure is reducing. But two, when you have strong numbers like this that come out in the employment rate, in the maximum employment question, then it does create kind of a situation where he has to kind of further dissect if the policy of reducing rates makes sense for where we're at today. We're keeping a close eye on it. If you're not subscribed to our emails yet, go ahead and go to our website, Portafolio Capital Management. It's actually portafoliocapital.com. There's a box at the very bottom. You can subscribe to our emails. We'll be sure to cover that once next week's meeting comes out. and we'll look forward to that. But other than that, thanks for checking in today, and we'll talk to you guys soon.